Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our overall market conditions and ratios for a commodity bull market. We'll see if they're still all intact. We'll see what they're doing and how they're changing against each other. And we'll also go over the 10-year yield and bonds and see what they're doing as well. So this is kind of a gut check to see if everything is progressing forward. And even if some of these ratios are we'll say going in an unfavorable direction, we have to see if they've broken the big trend. So if that is the case, I haven't looked at these. So let's dive in. Let's take a look. We've got the 10-year Treasury yield. The yield is continuing to go up. What that means is that people are selling bonds. They are not afraid of a market crash. They are afraid of inflation. And that's what it shows. Now, it doesn't mean that this is just going to go straight up. This will pull back at some point. It very well could pull back here shortly. But what we're looking for is the general overall trend. And that trend is changing from a downtrend to an uptrend. It's a new shift to increasing interest rate environment. That is huge because this is how money gets directed in the system. It also tells us what the bond market thinks about a recession in the near term. If this was diving down like it did in 2018, it was diving down, and we kept diving down before the 2020 crash. That means people are afraid of something. They're afraid of something, just like it did in 2007. We were diving down in interest rates, and it was diving rapidly. I was like, okay, there's something wrong here. And then we had the crash. It's basically a way to gauge what the banks are doing and how they're positioning in bonds. But right now, they're positioning to get out of them, which means that it is favorable for commodities, favorable for precious metals. And I know it doesn't seem and feel that way, but sometimes markets will throw you off right before they make a big move. Am I saying a big move's coming very soon? I can't necessarily tell you. I don't know, for a fact or anything like that, but sometimes they throw you off and they try to take your money, but they're not positioning in bonds. That's the important thing. They are not positioning in bonds for a crash. They're positioning to get out of bonds. Now, here is the Ishares 20+ year Treasury yield bond. In the environment that I am thinking is coming, we would be seeing bonds go down and yields go up. So, and that's exactly what we're seeing. And we are diving below that strong long-term support line. Now, it doesn't mean that we've clearly broken away from it yet. It could rebound and come back up, and it very well could. But it's showing us that bonds are being sold off. And that if this is a paradigm shift in interest rates, that bonds, the pricing of bonds will break its long-term downtrend to the downside all the way back in 2010. So we'll see what happens there. We'll see. And notice one thing else. In 2007, this is where we'd be positioning in bonds. And we would position in bonds for the crash. And that crash, we would hold it all the way up through, and then we'd probably sell as this thing comes back down in 2009. So we went from 83 to 122. That's a pretty good return in a very short period of time under people, basically under a crash of housing. Then we position into technology companies. We position in tech all the way up to about 2020, and then 2020 we swap into our commodities. Looking at, say, and now we're going to start swapping into the ratios. The XAU to gold ratio, this is the gold mining, silver gold mining to gold. I thought we were free and clear. We even posted this nice pattern to break to the upside. Kind of weird how this failed out like this, especially these past 2 days. That news brought us back down. Now, it's not structural. It's news. It's news about a 50 basis point hike. And it just, I don't know, it spooked everyone. It spooked all the markets. Again, I would be a buyer of this. Why would I be a buyer of this on a long-term, cost average in? Because this is setting up a bottom. The momentum was down, the momentum sideways, and then the next thing for this to happen is it to go up. We just have to watch to see if this hangs above this 0.07 mark. Maybe if we only come back down here and then we we launch, that's your last good buying opportunity. Looking at some of the other ratios, let me scroll down here, find them real quick. The CRB to S&P 500 is actually accelerating. Remember, this is a ratio that is a twofold. It's measuring two things. So the CRB index went down less than the S&P 500. The S&P 500 is crashing. Now, could this just blow to the upside? It very well could. And I don't want to get in the game of predicting necessarily what is going to predict the short-term future. I want to get the long-term right. And the short-term can bounce all over the place. News can impact this, a 50 basis point rate hike news. It's almost always when the Federal Reserve opens its mouth, it does some crazy stuff. But I'm going to stay long. I'm going to be in my positions. And this right here is favorable for the commodity index to outperform the S&P 500. And it's looking like we could potentially head higher in it. Now, platinum's getting hit on the forehead here pretty hard. We haven't broken the downtrend. This is the falling wedge with the downtrend line. We are coming back doing a full retest move. You could look at it as a gift, or you could look at it like, oh, it's not going to go anywhere. I'm looking at it as a gift, and I'm just going to keep buying. Why? Because it's a way to store wealth. It's a way to store wealth, and I want to store it in the cheapest assets around the world. Now, this could come back down. It could face some pretty good headwinds. But I'm going to buy it. Same with the platinum to palladium ratio. This ratio, there we go, is heading lower. And we could head lower, guys. We very well could. It is. And we're heading lower with the platinum to silver ratio. We're getting to very extreme numbers down here. If it falls much further, we're talking about like all-time lows down here. And if we get down there, I like it. I'm going to be buying me some platinum. But this is going to the tip of a falling wedge. And we are at very cheap valuations historically for platinum in relationship to silver. And the reason for this, I think we're just early. I think we are just early. We could be early to all this stuff. And it's always the hardest to hold on when it's early because it's still bouncing all around. It's rapid, or it's violently going up and down against each other, assets. And when you're early, you could still have these 50% drawbacks even. But it doesn't matter to me. I like being early. I'm going to hold on to my assets. Gold to silver ratio looks like gold's pumping up. It's actually heading higher where gold is outperforming silver. That is actually quite surprising. So we could still have some more time to accumulate silver. And remember, platinum's going down against silver. So we're going to have some really good buying opportunities whenever this bottoms out. And it may take a little bit because it looks like we're just breaking out of this trend line here to the upside. So this may take a little bit of time for all this to play out. I think we're still super early. Palladium to silver ratio. This is favorable for palladium. Whenever it goes up, palladium's outperforming. But it's mainly been going sideways this past about year or so. Dow Jones Industrial Average to gold. The Dow Jones, as this is going down, the Dow Jones is underperforming gold. So gold is outperforming when this ratio declines. And it looks like we had a pretty good decline here this past 2 days. So I do think that we've got a sell-off in the Dow Jones Industrial Average and S&P 500, and it's impacting absolutely everything. But it's impacting gold and commodities less than these assets. That's why these ratios are still compressing to the downside in a market that is going down. So people are selling stocks harder and faster and more volume than commodities in a kind of a sell everything event. We've got the gold to oil ratio. It is still moving sideways at about 18-19. So, and then this is the historical average is 15. So we're putting down a pattern. We're consolidating sideways. It looks like we've got some sort of pattern developing here, and we'll see how this resolves itself. The copper to gold ratio is still moving sideways. Why is this one important? Because this here will tell us if a crash is coming. Usually what happens is you'll see a massive move to the downside. And I'm going to back up here, take a big picture view. When this starts to decline like this in 07, we paused, and then you get this blowout crash here. It starts declining rapidly. That there signals that a crash is coming. This big, huge sell-off. So I don't see the sell-off. I don't see it. I don't see it in the yields or bonds. They're actually being sold off. People aren't running into it. So I think that people are more afraid of inflation than they are of a recession or crash at this moment. Here's uranium. Uranium's getting a little bit of a pause point. Looks like the cheetah's resting. I was hoping for a big move. But you know what? I said sometimes we see the retest move. It's retesting its breakout. So that's the uranium to silver ratio. We've got uranium to S&P 500. That one's pulling back. So we're pulling back. Big picture view. We're pulling back on everything and maybe rest a little bit at this point before a big move higher. Remember, momentum's down, sideways. The next momentum move is up. We're just resting on top of its pattern. Uranium to gold, it's also resting. It's putting in a small bloody nose. This is what it looks like on the dailies. So we rested here for a little bit. We went to launch, and then we've come back these past 2 days. Quite aggressively, too. We've got uranium to crude. It's pulling back as well. Crude is outperforming uranium. But we're trying to break out of this line. We'll see if it breaks. Crude is also a very strong asset. Very strong coming up in the summer. And then we've got the uranium to copper ratio that's also getting blocked, hitting that resistance line, and there it is coming back lower the past 2 days from that news. So we might have a pullback a little bit before a move higher for uranium. Just have to be patient. Being early sometimes is a pain. We've got lumber here. Lumber's still very resilient. I mean, yeah, we've got a little bit of a sell-off last trading session, but it's been very resilient, and we've maintained a very high level. And usually what happens is you kind of get this back and forth, and we may break again in the future to the upside over, maybe it takes another year or more of this going sideways. Nickel, another one that looks like it's coming to a dead period. So we had the massive launch, we had the consolidation, and it's consolidating at this point for a potential move higher at some point in the future, is my guess. Palladium just moving sideways in terms of dollar terms. This does, to me, look a little bit, well, it's a tough one to read. We've got strong selling pressure through here, and now we're consolidating. We've got cocoa futures. I'm going to take a big picture view here. Cocoa futures just moving sideways here. I think eventually this will break to the upside in a big move. Give it a year or two. Wheat futures already took off. Short term, they're in a consolidation period at the short term moment. And that's what I think a lot of these commodities are going to go into, is a consolidation period before a launch higher for like energy and whatnot, like uranium, perhaps. Soybeans just moving sideways. Looks like we could come back and do a little retest. Corn futures going sideways. But these are all at very high elevated areas. And then copper in dollar terms getting sold off a little bit. Still doesn't look bad, though. We're not just diving and getting sold off. Now, if we just start rocketing lower, then people think that a problem is coming. But we haven't seen it yet. And these markets move much slower than what most people think. Aluminum also getting sold off a little bit. Let me go to the weeklies. And I think this is entering a consolidation period, just like this little consolidation period. But there it is for aluminum. So that's what I've got for today, guys, for the market conditions. And everything looks good. They all look intact. It just looks like we're going into a consolidation. Perhaps it's a consolidation period. Commodities are still outperforming stocks, even though we're all pulling back, which means that the stocks are going down at a faster rate than the commodities are. People still like and prefer commodities over stocks at this time. So what I'm doing is I'm not doing anything. I'm just going to hold on, ride through it. It doesn't look like to me that there's going to be a crash by looking at our indicators. And we can look at the housing starts were also updated. We can look at that real quick too. Here's the housing starts. The housing starts remain elevated and above the average. So that also is a positive sign for our driver of inflation. The housing starts is, again, new loans against new homes is inflationary. It's an expansion of loaning and credit in the system. And as long as the driver of that expansion of loaning and credit is in the system, it's positive for it's positive for how we are positioned in commodities. So that's what I've got for today, guys. Hopefully this helps you out and keeps your mind straight. Give me a thumb up for the content. Subscribe to the channel if you haven't. Subscribe to the website, Platinum membership down below. We do the weekly Zoom meeting calls. I'm going to be putting up a training for technical analysis and how I use it, what I use it for, what I look for. We'll do one of those maybe if I were to look at the time frame here, I would say probably in maybe 2 weeks. Maybe I'll do it on a Friday or something like that. I'll take it off and do that, and it'll be videotaped. And if you can't meet it, you can still watch it on the website. So I've got all the videos, previous conversations, questions and answers, all on the website. Platinum membership gets you access to absolutely everything. You can watch all the videos. You can watch you can see all my picks in terms of what I'm buying. You can see my portfolio in terms of what I hold. And I don't put like percentages of the portfolio because that changes the entire time. But I'm heavily weighted in oil and natural gas at the moment. So that's what I've got for today. We'll catch you next time. This is Finding Value.